A very good morning to you. My name is Malcolm Grahamwood and I'm back here at Core TV for another CEO interview. Today I'm delighted to say that my guest is Steve Bowler, who's the CEO of IGas Energy. Morning, Steve.
Morning.
Great to see you. Thanks for coming in.
Nice to see you.
Yeah, great. Yeah. Thanks for coming in. First of all, welcome to the CEO interview slot. I'm glad I've been able to pin you down for the first time, and it's great to see you. Maybe the best thing to do for those people who don't know much about IGas is to give us a thumbnail sketch of the company, and then we can get into a bit more detail.
Sure, absolutely. I mean, we're a UK onshore business. We've got a mixture really of production assets and development appraisal assets. So on the production side, we produce about 800,000 barrels of oil per year, so not insignificant, from 100 sites across the country, so all onshore UK. Not many people know that really, actually, which is a good, I think, good for us. It means we're going around about our business very well. We get a tight discount to Brent, and we've got 2P reserves of about 13.5 million barrels of oil equivalent. So that's the production side. Operating costs are around $30 a barrel, so profitable in this oil price environment. And then on the upside, we've got 2C resources on the conventional business of about 20 million barrels, and a big shale upside of 2.5 trillion cubic feet of gas net risked resource to the company. So that's over 400 million barrels of oil equivalent.
Excellent. Now, a lot of people have been watching IGas for a long time, waiting for effectively what I'm calling what is actually beginning to happen right now. So you have, in the last few months, drilled 2 wells, Tinker Lane and Springs Road, and we're going to go into some detail about them both. If my memory serves me correctly, Tinker Lane, which is the original one, you didn't encounter the Boland Shale target, but you did get gas samples from Millstone and Grit and various places. And in Springs Road, you had a highly successful well. Why don't you talk us through those 2 wells with the technical?
Well, if I sort of start about, it's a basinal appraisal program. So we've got 1 well which we drilled at Tinker Lane, as you rightly say. We've got 2 wells at Springs Road. So we've recently announced the preliminary results of the first well. We've also got approvals to drill a new well, which has a horizontal section of up to 1,500 metres. So it's a basinal appraisal program. Tinker Lane was our first well. It was on the margin of the basin. So this was about satisfying a commitment. We had 2D seismic there, not 3D, so we were never going to go back and flow that well. But it was a fairly cold rig, so we needed to get that warmed up with the team before we moved to Springs Road. So what we found at Tinker Lane, I guess, were probably 3 key things, really. 1, drilling speeds were much, much better than we hoped, and that sort of benefited from our experiences elsewhere in the country. And taking, we didn't take full cores, but we took some sidewall cores. We've taken some preliminary data from that, which does look encouraging. But thirdly, we'll come back with more data on that well in due course. So very beneficial for us. The team did a great job in terms of drilling and preparing the site. We've now moved off the site and we're restoring it as we speak, and then or abandoning it, and then we'll restore it. So, that was a good start to our appraisal program before we moved to the more material Springs Road well, which is a much deeper well, up to 3,500 metres. So to date, we've got 3 targets there, and we've gone through the first 2. The second of those being the Boland Shale, and we've taken over 250 metres of core. I've got some here to show you, Malcy.
Let's have a look at this, because a lot of people wouldn't have seen this before.
So that's
it
basically
dense and solid. And,
well, as you can sort of hear, it's a bit like a slate or a granite. So that's taken in the Boland Shale. And if you look on the website, you can see that when it's sort of not this specific one, but another, where it came out of the ground, and we put it in what's called a fish tank, and shows the gas
fizzing out of it.
And fizzing. So that's that's what we do. So it's quite nice to be able to bring that to you. It's been quite a long,
I'm delighted.
hard battle.
I don't think anyone has ever bought a core in, or even a bottle of oil. But
Yeah.
That explains a lot, actually, because a number of people initially wondered why you went to the outside of the area to drill the first well. As most people would think, you would go for the sort of the biggest opportunity first. So that's very, very helpful.
I think probably from a market perspective, that's right. But from an operational perspective, we wanted to get everything up and running.
So tell me, what did your resource and gas in place numbers look like having drilled, particularly Springs Road?
It's come on prognosis, so that's very encouraging. Again, at Springs Road, drilling speeds were much quicker than we expected.
Yeah.
And as I say, we've cored that interval, and we go and drill on now to a deeper interval, which hasn't really been explored in this area before. So nothing in terms of the change in the numbers,
right?
But we're preliminary, and as we go through, interpretation of those cores and more on the logs, then we'll come out with further data into Q2 and beyond.
So I was going to ask these two questions later on, but you mentioned the fact that you're drilling deeper, and you're going to drill the second well, and it's going to be horizontal, one at a time. Well, why are you drilling that much deeper? Do you genuinely think this will be below the Boland Shell?
Yes.
Yeah. So what might you expect to find?
It's a carbon. Hopefully not. We've got quite a lot of data. We've got 3D seismic across all of this area, so it's we understand a lot, but clearly you need to drill.
Yeah.
So that's what we're doing. The rocks have come in on prognosis at the top. We've got a tertiary target there, which again we think is gas bearing rocks essentially.
Yeah.
And that's what we want to find. Really, it's commercial, highly prospective rocks. And when you've got a number of targets in a given well, obviously so much the better from an economics point of view.
Excellent. So how much do you know so far, and how long is it going to take before you to be able to get down to the lower depths and the analysis of the existing and future cored?
So if we just on the well itself, it's going to be another few weeks. We'd expect. And we again will log that section as we go down. So really, for us, this well is a huge amount of data gathering.
Yeah.
As you can see, we've taken 150 metres of core, so that's very important. Those cores have gone off to the laboratories, and that will take a few months to come back. So we're into Q2 before we'll know more, and the full extent probably into Q3. But we'd obviously update the market as we go through.
Yeah, and I guess since it's taken you so long to get the approvals for these wells, when you've got some drilling, you might as well get the most benefit out of them.
Absolutely.
I mean, so I gather from what you're saying is that you don't know quite how commercial these wells might be, but I did notice that in one of the RNSs you said that apart from the fact that 80% of British homes are heated by gas, you are in a position to heat and provide gas for quite a lot of the areas that you're drilling in. So you must have some idea.
Well, I think there's probably sort of three key things for us in terms of commerciality. Rock properties, so is there gas content? Is it are the rocks of the right quality to be able to fracture them, which is what we have to do, and then ultimately will they flow? So we're getting as an industry a lot more data around those points. Costs, so drilling costs, pad costs, we need to understand those, and we're obviously driving those down with better rates of penetration on the drilling side, and then really the gas price. And the gas price is very favourable for us in the UK. Probably three times what it is in the US. So I think, all of those things mean that we believe it will be sort of highly.
I mean, before. Well, I mean, I like the idea of that because compared to the US, because of course, all the time that the UK onshore is being talked about and now actually being drilled. People have said that the comparison with the US and the fact that they put a huge number of wells down, produce a lot of gas, but the price is, as you say, only a third of what you're going to get when you sell it. So, is it realistic to be now comparing the UK with the US in terms of gas production?
I think there's an opportunity there that we understand a lot better as we gather more data, but ultimately we'll need more flow rates. But I think the dynamics
I
are there,
understand it's
and
early days.
and there's some differences where in the US they've had to put a huge amount of infrastructure in place. Well, we have that around the country, and a ready demand for the gas in the communities in which we operate.
While we're on the subject of communities, I was going to ask that later on. You have been amongst probably the forefront of the companies operating in this area over some years, especially if you look at your website over the years where you've developed relationships with local authorities and communities and everything else. Not just in putting the area back to what it was like before you started drilling, but also financially making sure that through the sort of archaic system of payment we have in this country, you make sure that they are going to succeed financially or profit from what you've been doing. How does that work within IGas?
I think actually we almost have two different aspects to that. We've got our conventional business where, as you say, those assets have been in and around those areas for many decades.
Yeah.
At Gainsborough, that's just over 10 miles away from Springs Road, they've drilled over 60 wells since 1969 there.
Yeah.
And actually not that many people know that that's happening. So that's sort of where I would say you've got your social license to operate. The guys that work there do it extremely well. We are branded, but and rightly so, because we want to show people we're doing things right. And then when you go to new sites, that's quite a different thing, because what you're trying to do is engender trust from those local communities. And we understand that's what you have to do. And what we are doing is doing what we said we would do.
Yeah.
And that's what it's all about. And I think that only comes over time.
Yeah. Well, it certainly, looking at the website and having known, as you say, you and this company for a long time, I can say that's the way it is. Let's go back to the well. You said that you need to drill a second well. Presumably you'll use the same kit as you're using for the first well, so that will happen sometime after it. So another well will happen at that stage, say in a few months' time. You also use the H word, the horizontal word. Does that mean you have to, I know you said you've got approval. Have you got sort of full approval for drilling a horizontal well, and you won't need any more regulatory approvals or anything else?
No, we have the approval to drill the well, but we need to go back for planning and a frac plan approval to frac that horizontal. And what we've always said is, if the data is encouraging enough for us to do that, we'd like to come back and put that in. And so we need to go through the next stage of that data analysis, but that would be our intention to come back after that. And
the F word, the frac word, isn't a dirty word now, because we've proved in a number of areas, particularly other wells that have been drilled in recent months, that it's been a success. So how fit do you operate under this traffic light system? And,
we all have to.
It's all the same for all the different operators.
Yeah. That was part of the written ministerial statement that was put out by Ed Davey in 2012, where and I think probably rightly so, he wanted to be. It was after the moratorium, so wanted to put something that is inherently conservative out there, but at the time it was said that would be reviewed with further data.
Good, and that's the further data that you're providing for them. When I saw Quadrilla's announcement, they clearly had a super well as well. I mean, and under really difficult conditions, regulatory conditions, which I got the impression that they were allowed to drill like two of 20 or something opportunities. You sound like you're more happy with the way things are going, and it's a bit more straight.
No, I wouldn't say that. I think they're just at a different stage in their appraisal. Yeah. So for us, it's an exploration well, and we want to go on and frack the Springs Road 2 well if the data supports it. So I think what Quadrilla have said is that they got 2 fracks away well, and that data supports a very sort of positive opportunity.
So that data
for the country
will be added to the traffic light sort of thing, and then hopefully it'll be able to be expanded.
Exactly, and they've got 40,000 data points that they've gathered through that well, that they can now share with people to benefit from that experience. So I think for us, that 0.5 is, I think, to get to commercial production, that is prohibitive.
Yeah.
But we're not at the point where we get to commercial production. And obviously what we want as an industry is for the scientists at the OGA to go and analyse that data and review it.
And one assumes they will. And of course, talking about other companies, IGas have been banging the drum very loudly for this business for some time. They even thought that Tinker Lane was a little more... they were a bit more positive, weren't they?
Maybe I'm inherently more conservative, but I think what they're saying is right, is that the preliminary data analysis is very encouraging. It's in a shale, it's not the Boland shale, but frankly, if it's in gas-bearing rocks, then we shouldn't care which shale it's in. And what we want to understand is, through that further data analysis, does that support that assumption?
So just finally on that, would you say that the activities that happened from primarily yourselves, but obviously, and you can't talk about the other companies, but what's happened overall in the last year has given a chance for UK onshore energy policy to take a step further forward?
Yeah, I think yes and no, probably, because on the yes side is the UK onshore operator group released recently an update to a report they'd done a few years ago, but based really on extrapolating the Cadrilla Preston New Road well. And what they're saying there is that ultimate recoveries look a bit better. We're seeing recovery factors in the States go up massively, and we know we've got a big resource. So, from a single pad, we could produce enough gas for 500,000 homes. Yeah. And 60 pads could reduce our import dependency by 50%. It is, and I think UK energy is struggling, right? Because we know we need gas.
And they understand,
we know we want more electricity. Well, where does that come from?
Exactly. At the moment, and it comes in from Russia or Norway or Qatar or even the USA. Briefly, I'd like to have a quick word how IGas is financed, and you did a big refinancing, 2 years ago or more?
Yeah, close to 2 years ago.
2 years ago, which brought you to this stage. How are you placed financially and balance sheet and everything to pay for what you've got coming up?
Well, I would say, we could always do with more money like any company, but I think more of our challenge is putting it in the ground, quite frankly, with timing. So we've got the conventional business there, so if you think about that, 800,000 barrels of production a year, broadly, plus or minus. At $65, we achieve a tight discount to Brent, so sort of $50 million of revenue with operating costs of $30 a barrel. So we are generating free operating cash flow.
So that's good.
So that's sort of we have net debt, but it's low. It's below $10 million, and of course we've got a carry from INEOS for $230 million.
Yeah, of course. Yeah. Before we go, I'd be murdered if I didn't ask you about your acreage in the Wheel Basin, because there's a lot of excitement from UCOG and that people. You've still got acreage down in the Wheel Basin. What's your plans for that?
Yeah, we are. I mean, we on the conventional side broadly, but in the Wheel as well. We've been looking at some field studies. We're maturing those. We obviously are watching with interest what UCOG are doing, because we do have a decent acreage position down there, and we'll firm that up in due course, really. But yes, there is an opportunity for us to grow that conventional business for sure.
And you've got results coming out next week, so you'll have a lot of statements and things for the market to have a look at. We've had a really detailed rundown of what's happening at IGas, and for which I'm very grateful, Steve. But time is beginning to run short, and I'm sure we could spend another 20 or another 40 minutes on it. As we get to the end of the interview, what I always ask, but I'd particularly like to ask you, because this has been a game-changing few months for IGas, is what's your vision? Where do you see IGas over the next 12 to 18 months, Steve?
Well, I think obviously getting further data, but really understanding that opportunity that we have to basically deliver materially to the UK energy policy, and particularly in the context of Brexit.
Yes,
we don't know where things are going, do we? But if we end up with tariffs and all of that sort of thing, then we may need homegrown energy, and it's fallen off a cliff. So I hope we can contribute to that. We look really in the short to medium term about how we can think about development concepts across a play, and whether that's solely shale or builds in some more conventional, depends on the area. So I think that's really the key. The key for me is to unlock, and rather than it being a sort of a promise, we've got a bit more data to support it.
Well, that's brilliant, and it sounds very exciting that we're now going to be able to. We really can potentially reach out and see us providing gas for our own homes in this country. Thank you very much for coming by.
Thanks, Marky.
My guest today has been Steve Bowler, the CEO of IGas Energy. My name is Malcolm Graham-Wood. This is Core Finance. Thank you very much for watching, and I look forward to seeing you again soon. Bye now.